And it worked. It absolutely worked, and we got this brilliant sell away on oil, which is still the same trade. And again, when we drill down into a 1 minute chart, we can see that this trade started to form a lovely paycheck level. You'll see there was a little paycheck level formed right here, and then they sprung the paycheck at 3 o'clock beautifully. And it opened the door to a very, very easy money short trade coming in off of that commercial zone over here. And your job when they spring the liquidity is to try and capture the top tick price. Try and capture the top tick price. Try and get into that deal and see if we can get a little bit of a move. Now, obviously, that gives us an idea of a measure target, and it gives us an idea of a bottom edge measure target as well, and we start working our way through these measures. Sell side top, first liquidity, sell side bottom, second liquidity, and obviously if the value is still improving, we're in still pretty good shape for us to carry on selling. And when you look at that in terms of the overall shape, it looks good. Everything about it looks kind of good about it, doesn't it? Now, the only challenge we've got is obviously the bond sell-off. The fact that the bonds are selling off is going to suggest, of course, that there's a high possibility that oil prices will probably start finding some ideas about buying some bottom edges sometime soon. So if you're in a short trade, I would just be booking a bit of money and getting ready to watch for other opportunities. But a very, very good trade, by the way, guys. A very good trade in here. Selling off 83.20s. We got down to 82.20s this afternoon for $1,000. And yeah, that's a pretty good trade at that stage. Pretty good little trade, guys. So that's a nice outcome. Do pension funds sell euros for dollars? Well, obviously it depends what their position is. If they're long, what they're needing to do in that location, David. If they're in a long position at that point, then we can obviously look at that and say, yeah, that's what we're going to be looking at doing. If the dollar is rising, then obviously we would normally expect them to sell the S&P if they're trying to rotate into something against that. So obviously we trade, if for example, we're trading the euro dollar, we would trade the S&P DAX against that. If we're trading the pound dollar, we would trade the S&P FTSE against that. So if the pound is rising, we would be looking at selling, not selling equities, we'd be looking at buying equities. But if we're selling equities, we'd be selling the S&P on the uptick, and we'd be buying the FTSE on the downticking phases. You know, if we're trying to hedge out that exposure. You know, that's why it's a positive correlation if we're trying to hedge out that exposure.